Well, this week, the final piece of the jigsaw puzzle about the future of interest rates will happen when our quarterly inflation is released on Wednesday. Our business editor, Ross Greenwood, joins me now. And Ross, this could spell trouble for the government heading into an election campaign.
Well, it sure could. There's no doubt about that, Laura. You think about this. If you've got an economy that is potentially going to come under enormous pressure as a result of higher interest rates in Australia, if you've got the ongoing spectre of inflation, which is becoming embedded in our economy, you've got then, sort of the push for more wage rises into the future. So just having a look at what happens on Wednesday this week, the markets right now are suggesting that inflation is not going down, as was broadly predicted by the government and also by the Reserve Bank, but in fact is going the other way, is rising during this period of time. And that's the reason why the narrow path that the Reserve Bank talks about is really one of these big issues. Yet other parts of the world where interest rates have been increased more aggressively, they've tanked their economy. You can see that inflation is coming out of their economies. So you can see broadly Australia's inflation right now, even though we might be sort of a quarter behind some of those other numbers right now, you can see there Canada, which cut interest rates in the past 2 consecutive months at 2.7%, but Australia potentially interest rates going the other way. And that's why when I spoke with Jim Chalmers yesterday for Business Weekend, it was just instructive to see his take on this potential increase in inflation, which he acknowledges. Have a listen.
What we've seen around the world is that inflation doesn't moderate in a straight line. It zigs and zags a bit, and often at around the level we're at now, we've seen in other countries it plateaus a bit before it starts to go down again. We saw that in the US and we've seen it in other countries too. So I'm confident that even though the inflation number that we expect to see on Wednesday, we expect inflation to have been persistent in our economy in the June quarter, but we are still confident that inflation will continue to moderate after that.
Right, so who is the Treasurer sending that message to, Ross? Is it to the community, the voters, or is this message to the Reserve Bank Board?
Oh, you cynic, Laura. You absolute cynic saying that. But the reality is that the Treasurer is definitely sending a message to all of those groups, there's no doubt, but particularly to the Reserve Bank, you imagine. And the reason for that is because the Reserve Bank, as a result of government policy, where the Reserve Bank's new mandate is to prioritise not just inflation, but also jobs. And that's a tough thing to be able to do. And so Australia right now is embarked upon a course of policy which effectively leaves inflation higher than the target band to try and preserve as many jobs as possible, which is a noble and honourable thing to do. The question is whether this policy, which has not been really tried or succeeded in other parts of the world in the past, whether it can work, and that's the key. You can see here at the moment, like there's a 20% chance, the markets are saying, of an increase in interest rates here. But at the same time, the United States, where the Federal Reserve makes a decision this week, there's priced in a 4.5% chance of a cut, but the markets broadly are expecting that the Federal Reserve at the meeting this week will basically say that they're on track to start cutting rates in September. So therefore, as a result, US interest rates coming down, European interest rates coming down, Canadian interest rates coming down, potentially New Zealand interest rates coming down, Australian interest rates going up. And that seems to put us at odds with other parts of the world.
Okay, so how are the markets coping with the prospect of another rate rise?
Well, technically they shouldn't be coping very well at all. But there's one oddity in all this, and I just want to show you the Aussie dollar. Now, the Aussie dollar, technically, if rates here are going to rise, but other parts of the world are falling, then you'd imagine that our dollar should be taking off. It should be getting out way above 70 US cents at the moment. It's not. It's really quite suppressed, and there's enormous strength still in the US dollar. So that is quite an unusual thing to be happening right now. You should be seeing that dollar much, much higher than it is. So here's the ASX 200. This is today. We're starting to see this pretty strong, so that's not a bad thing either. If we go further forward, we can actually start to see what's happened over the past year. Our dollar, our stock market has gone to those record highs. It's offered just a little bit, but up almost 8% over the course of the past year. So all of these things undoubtedly are affected by interest rates, but it's also the aftermath of any rate rise, if it were to come, the impact on business, the impact on employment, the impact on the overall economy, and that, of course, would have an impact on the politics going into a federal election.
Absolutely. Ross, thanks so much for that. We'll see you soon.